let's go ahead and dig into your pick of the week. I know that a lot of
Yep.
people always look forward to what you're eyeing, and this week it's an ETF, the Semiconductor ETF X3, ticker
Yep.
symbol SQXL. What's the storyline here? It's the ETF
And
semiconductor.
SOXL, I think, actually.
S
I put
oh
Q, but I
SO.
think I apologize. Yeah, so first of all, you guys know, or if you don't know, here's my thought on ETFs. So I like to do a little bit of fundamentals analysis on the actual companies and how they're doing as a business before I trade an option strategy on them. I feel like that fundamental, along with my technical analysis, along with a little bit of qualitative analysis, gives me a leading edge, right? And ETFs really don't allow you to do that same fundamentals analysis, right? You have to instead try to analyze whatever the ETF represents, usually a sector. Still, ETFs do have, that's the con. ETFs do have a pro, and that is they have been getting so popular recently, and they're most of them are optionable, and the option chains tend to have a lot of activity. So if you're looking for liquidity, a lot of times you can find them in the ETF, especially one like this. This is a semiconductor ETF, and ETFs are usually geared so that they match whatever they're based on, whatever their theme is. In this case, it's the semiconductor industry, and they're either matched to be a direct correlation or an inverse correlation. So in this case, with it being a semiconductor bull ETF, that means it's going to go in the same direction as the semiconductor sector. If the semiconductor sector goes up, so will this ETF. And then the X3 or times 3 means that the ETF will actually go up 3 times as quickly and go down 3 times as quickly as the sector. With that said, this particular ETF has shown me a bottom, and I'm looking to see its top. It actually gave me a bottom signal about a week ago with follow through, but then it's pulled back. It gave me kind of a false positive reversal signal that's already been canceled out, but it's giving us another opportunity to get into this trade. And I feel like this could be a directional trade that can, if necessary, become a premium selling trade. So here's what I would do. We would go long the ETF. That means buy the either the ETF, or there is a possible substitute. So if we wanted to buy a substitute that we could then sell premium on in the future, what we would wind up doing is going pretty far out in time. And I'm thinking the January leap. So that would be an expiration date of January 17th, 2025. And we'd go pretty deep in the money. Now, you'll notice another positive of this particular ETF is that the options are trading every dollar, and they're quite active, meaning there are investors in there using this ETF as a hedge against any of their investments. So I'd go somewhat deep in the money. I'd probably try to find something that's maybe this $26 or $27 strike price, bringing the price of the initial investment from about $40 down to maybe somewhere around $17.50. So using a little bit of leverage, and at the same time making it so that it's not so expensive for us to get into this trade. So setting up that long position. Now, in that long position, whether you buy the stock or you buy the call option, if this thing goes up, so does your investment, and great, you're in a bullish trade. If we continue to find our levels of resistance somewhere around $50 and we reverse, this would be a beautiful opportunity then, whether we bought the stock or we bought that deep in the money, far out in time stock substitute. We could sell call premium and buy protective puts only if it stops around 50 or maybe even as high as 55. If it stops and reverses, that would be the opportunity to sell some call premium, and that creates for us an instant dividend and a profit buffer. It basically, puts in place that automatic time passing by strategy that we just put on cruise control. And we buy some protective options probably around here, around the $35 strike price. Those would be some protective puts 3 to 6 months out. And once you get those two trades in, then it becomes a time passing by strategy. And you just let time put money in your pocket. And so I'm really kind of excited about this one, especially since semiconductors seem to be the investment du jour, with the U.S. government really putting a lot of money into bringing semiconductor manufacturing back here to the States, and also with the AI movement where you've got ARM and NVIDIA and AMD really getting some investment from across the board. So yeah, I'm excited to go bullish on this, but select that initial bullish trade in a way that, should it falter around resistance $50 to $55, we could easily adjust that position into a premium selling trade. I think this is a good one and people should put it on their radar.